to MIT Sloan Alumni Online. We are bringing you conversations with principled, innovative leaders who improve the world, and we are joined today by Ujjaval Desai, class of 1994 undergraduate, and a Master's of Engineering graduate from the class of 1995. He is the head of structured products investing and portfolio manager at Soundpoint Capital, as well as the CEO of Soundpoint Meridian Capital. He has had an illustrious career in finance and has remained involved at MIT in so many ways over the years, and we are so pleased to have him on the program today. For our viewers, you may enter your questions into the Q&A panel of your Zoom interface, and you can also drop us a note in the chat to let us know where you're tuning in from today. But thank you so much, Jackie and Ujjaval. We're so glad to have you with us today. I will go ahead and turn it over to you.
Okay. Thank you, Greg, and thank you for the Sloan Office of External Relations for your continued partnership on this series, and thank you all for joining us today. As Greg mentioned, it is truly a privilege to welcome Ujjaval to speak to our community today. As a portfolio manager and pioneer in the CDO market, as well as an entrepreneur and public company CEO, Ujjaval brings a wealth of knowledge and a diversity of experiences that are nothing short of remarkable. The insights that he'll offer today as a result of those experiences translate across industries and sectors. And it has truly been fascinating learning from him as we prepared for today's discussion. And I am delighted for all of you to have the same opportunity today. So Ujjwal, thank you very much for taking the time out of your day to be with us. Before we begin, I would love to invite you to share a little bit more about your background that will inform our discussion today.
Great. Well, thank you, everyone. I'm honored to be here presenting my background to MIT community at large. MIT holds a very dear place in my heart. It was, it was a tough experience, obviously being a student at MIT. But after leaving the university, I really, looking back at my experience there, it was just incredibly amazing at what I learned, the people I met, and the opportunities I've had since then. A lot of that had to do with MIT and sort of the doors that it opened for me. So I'm extremely, thankful to have been part of that experience, and it literally has changed my life. So anything I can do to kind of give back to the community, to be an ambassador, to help any current students or alumni kind of, answer any questions that they might have, is certainly something I'm looking forward to do. So even after this session, if anybody wants to reach out, feel free to do that.
Thank you, Ujjwal. That's very generous.
So in terms of my background, so after I grew up in India, after high school, came to the US and joined MIT. I transferred into MIT as a sophomore, and then was very interested in engineering, electrical engineering, building systems and computers. And so I did course 6, undergrad, class of 93. But I also got basically a 5-year master's program. So I technically got my undergrad and grad degree in 94, and then stayed on for another year and a half to kind of, I was in the PhD program, got my my second master's there. And then, I switched. So, we'll talk today about the switch from engineering to finance. But I switched in sort of late 95. I left MIT and joined banking, and I've been in it since then. I think, a lot of what I learned at MIT, I've been able to use that in developing and growing my career, and continue to do so even to today.
Wonderful. Well, thank you very much, Ujjwal. So that's a perfect segue into our first question, because as you noted, when you graduated from MIT with an engineering master's, you received offers from multiple tech companies. But ultimately, you decided to join Goldman Sachs and pursue a career in finance. Could you talk a little bit more about what informed that decision?
Sure, absolutely. I mean, I was pretty young, so I'm not sure if I really thought through the decision too much. It was maybe a little impulsive at the time, but I'd always wanted to be an engineer and loved, building systems, as I said before. And I enjoyed my time there doing research, learning about, various fields of engineering. But one thing that was bothering me a little bit at the time was the research I was doing was useful, but on a very long-term basis. So there wasn't any immediate impact on what I was doing. I was doing a lot of signal processing, designing kind of new systems for transmitting signals, which was very exciting. But the the deployment of that technology was sort of further out. So a lot of my friends at the time were going into banking. It was a kind of a very hot area in the early 90s, and whereas banks were looking for engineers, looking for people who could come in and do financial modeling, financial engineering. So I decided to interview both at banking firms as well as engineering firms. As you noted, Jackie, I had a few offers to go to these engineering companies all over the US. But I also got this offer from Goldman Sachs. And what attracted me to that was, it was different. And so I wanted to try it. I thought I could try it for a couple of years, and I didn't like it. I could always go back and finish my PhD. But it was in an area at Goldman that was a very interesting kind of unique setup. It was a hybrid business between banking, research, and fixed income trading, and so it was kind of the core of it was financial engineering, a lot of modeling, which obviously I like doing given my engineering background, but we could apply it immediately to solve investors and our clients' problems. And so there was an immediate impact to what I was doing. And so I didn't want to just come up with ideas that could be published and then didn't know if anybody was going to use them. Here, I could actually use these ideas to have an impact on our clients. So I thought I would give that a shot. And so I moved to New York, joined Goldman, and the first 2 years were kind of really difficult learning about the new field. I had taken some courses at MIT in economics, but no finance courses to speak of. So had to learn on the job, learn all the different sort of financial tools and the vocabulary really, and it was a tough going first couple of years, but look, it was very similar to our MIT experience, which is always tough as well, and you just have to kind of live through it, which I did, and it was extremely fruitful and the right decision for me. But the role itself was very similar to what an engineer would do at an engineering firm, designing a product. Here, instead of a product being an engineering product, it was a financial product, and so that really helped ease their transition into this new field.
Mhm. So building upon that, you were part of a team at Goldman Sachs that pioneered the origination of CLOs, which is a structured product, as you mentioned. So how did your training at MIT prepare you for and enable you to identify this opportunity in the market?
Yeah, absolutely. So after about a year of joining Goldman Sachs, about 1997, I was recruited to this new group that had just been formed, and the group was basically involved in what at that time was called CBOs, collateralized bond obligations, which is basically a fancy term for describing securitization of high yield bonds. And what this product was very similar to what was happening in the mortgage world. So many people are familiar with mortgage securitizations, which is effectively taking a bunch of mortgages, and this is how kind of the whole the U.S. housing market is financed, is to have people's mortgages. They sit in pools, and then a lot of different investors, institutions, and others would invest in those pools. So we took that technology of securitizing mortgages and applied it to securitizing bond portfolios. The big difference there was while mortgages were static, these bond portfolios were actually actively traded. So what you're doing was effectively raising money for a bond manager through a highly complex securitized product. And so that effectively was financial engineering to tools applied to bonds. And for me, again, everything I'd learned as an engineer to be able to model out risks, to be able to model out different scenarios of what could happen, was very relevant here, right? Fixed income investing in credit is very modeling intensive. There's a lot of scenario analysis, probability analysis to understand whether a company you're investing in is going to default or not. And the securitization technology is really taking a large number of these types of bonds, putting them in a pool, and then trying to figure out what could happen to that pool going forward. And so again, a lot of analysis is required in there. And so we started with that as the initial product. Now, what really made us successful in particular in that was the fact that we were able to use, again, some of the engineering skills we had learned to apply that old technology or the mortgage technology to the bond markets. And as I mentioned earlier, the unique part of this was the fact that these portfolios were flexible. They were changing all the time. So the technology had to be re-engineered to fit this new asset class. And so we were very instrumental, my team, at really coming up with these new ways of creating these products, and that was really incredible because we were at the forefront of really driving that process forward. And the team was really fun. I mean, there were only three of us. My boss, who started the business, was really he was also from MIT, but he was kind of more of an originator and sort of a sales kind of head. He would bring deals in. We had a lawyer who kind of helped document some of this stuff, and then me as the kind of the grunt, if you will, in the middle, just making it all happen. But it was really an amazing learning experience. We were kind of just creating these new products from scratch, and it was a sort of it wasn't just it was a soup to nuts kind of effort where we were creating these products, raising capital, documenting the structures, and then helping invest that capital in different portfolios, monitoring these things going forward, valuing them, trading them. So it's really, I got to learn all facets of that particular technology, and learned a lot of these different skills that were necessary to be successful. So really, I was lucky that within the first kind of year and a half of my finance career, I was introduced to this technology, to this business, which I took a leap of faith and kind of joined that team, and it absolutely was the right decision for me to make. We became the #1 bank in that area and grew that business rapidly. Eventually, then we expanded that product to what is now called CLOs, which is what you mentioned, which is what I do now, and that's really is just collateralized loan obligations. So we are now effectively securitizing corporate loans, and that is a big industry now. It started out, really in the late 90s, but today it's about $1.2 trillion asset class. So it's really at the backbone of what pretty much the entire U.S. Corporate corporate market, how they finance themselves. All the big companies in the U.S. finance themselves with loans, and we are effectively creating these products that allow investors to invest in the loans in different with different risk return profiles. And so that's really the market. But again, my background was perfectly suited to this particular field, and we really spend the time to learn the underlying product and really become an expert in that, so that we could differentiate ourselves from our peers, and we were successful in doing that, which is what led me to continue working in this field. I then moved to London with Goldman Sachs, and eventually moved to JP Morgan, all doing this same product, but then applied this technology to the European markets. So having started out in the US, Europe was 5-10 years behind the US. The European market had additional complexity because it was, there were 15, 20 different countries, different currencies, and so we had to really adapt the technology to a new field there as well. So again, a lot of innovation was needed, but I think again, being one of the first players in the space and really knowing the product inside out allowed us to be successful in Europe as well.
Mm-hmm. So that's fascinating to be able to be at the forefront of really developing and bringing a new asset class to market, both in the U.S. and then overseas as well. That's amazing.
Mm-hmm.
So I know you took that experience and then also are a founder And you started your own fund, which was then acquired by Ares Management. So could you talk a little bit about what you learned from this experience?
Yeah, absolutely. I mean, that was really one of the most incredibly rewarding experiences of my career. Setting up a business from scratch. So in 2006, I was looking at what we were doing, my team was doing, and we were very successful at making money for the bank where we were working. But I thought we could do that for ourselves. So my partner and I decided to leave JP Morgan really at the peak of our careers because the business we had built was doing incredibly well. We left and we set up a firm on our own called Indicus Advisors, which really, what I said before, was a great experience. It is one thing to work at a company where you are, you know, innovating and doing well, but you have a big team of people supporting you, and you're not really taking a lot of personal risk. You are effectively investing and for other people and on their behalf. Having your own firm, your own company, meant you had to really believe in yourselves and put a lot of personal capital at risk. So that's what we ended up doing. We had to put all our savings, every penny we had, into the business, into creating the company, hiring individuals, setting up the office, and then investing in our own products so that we could really launch them. So that was really amazing experience. A lot of learning happens in those types of situations. But again, the main reason why I did it was because I felt I understood the asset class really well. I felt that I could make a difference. I felt that I could create a product that could be very beneficial for our investors, but do it in an entrepreneurial setting. And so that's what we did. The hardest part about setting up the company was actually coming up with the name, because it's actually very difficult to name these things. A name that actually is positive, has a positive connotation. It needs to really be attractive from a marketing perspective, but also something that's not taken. So that was the hardest thing, and my wife actually came up with the name Indicus, which is basically the mountain range that Alexander the Great crossed when he went into Asia. So had a nice kind of international feel to it. Mountains are always good, have a positive feel to them. So and it wasn't taken. So we used the name, and really it was incredible. I would come into the morning and be kind of involved in investment committee discussions, then go and interview people to kind of hire, and then go and buy a garbage can for the office or whatever was needed that day, or a coffee machine. So it was really an amazing experience building it from zero, really ground up. We got lucky with the timing. The market was really there's a real bull market in 2005, 6, and 7, and so we were able to grow the business pretty fast. We had an execution plan that we stuck to. So again, before setting up something where you're putting all your own capital at risk and taking other people's capital, you have to have a plan that has to be well suited to the opportunity. And we had it. We really executed it. I think to the T. Got the business up and running very quickly. Raised funds as well, so that when the financial crisis came, which was not very long afterwards, but within 2 years of us setting up Indicus, we were able to withstand it. And obviously I'll talk about what happened there next. But that really was the impetus for setting up the company, and the learning experience there was truly amazing. And I think it can be applied to all sorts of fields. I mean, I don't know. I think a lot of people here are Sloan people, but some engineers. But I think in any field, setting up a company requires you to take a lot of risk. But again, you got to be smart at taking that risk. And so that was what my kind of main learning experience from that. We then went through the financial crisis, which was not easy, especially to be in a product that was at the center of the financial crisis, securitizations. The product I was doing, fortunately, was not really the reason why the securitizations caused all that damage. It was one of the few asset classes that actually, was unharmed by the financial crisis. It was actually, it did extremely well. It was one of the best performing asset classes within in the securitization industry, and survived the financial crisis, thrived actually as a result of it. And so that, is the reason why I'm still doing it, because it's actually a great product. It is misunderstood by investors, but we did extremely well. I mean, sure, in the middle of the financial crisis, our firm was worth zero. Our investments were significantly down, and it required a lot of patience and luck to actually, and hard work, obviously, to actually survive that. But what we did, we came out of it. Our funds did extremely well. Our investors made lots of money through that financial crisis. And when we came out of it, we were stronger and bigger as an institution. But I think what the difficult part that we didn't fully understand coming out of the financial crisis was it became extremely difficult to raise capital, because nobody wanted to give money to a small company, and they were looking for brand names. And so we decided to sell our business to Ares in 2011. And as part of the transaction, I moved over with my entire team. All our funds moved over. So it was really, just finding the right home for our business. And we didn't, dismantle it. It wasn't sold for cash. It was really, we were reinvesting in the growth prospects of that business itself. So that's when I went to Ares in 2011 with the team. And we continue to grow that business over at Ares as well. I think it was interesting because there are a lot of things that came out of the financial crisis. One of the things was when you as a business owner go through this downturn and your business is worth zero, you have all sorts of investors and employees and others that are counting on you. That was really a great learning experience to be able to go through all that in a way and make decisions that were good for all parties involved. And I think the whole experience of raising the business and then actually selling it and the full going through the full life cycle of that was I think quite exhilarating. And to see that somebody was willing to buy this creation that you had built and put a value on it was obviously quite thrilling.
Absolutely. Well, building upon that too, certainly as your experience as a founder and everything that you had just mentioned, but also you are a board member of MIT's Sandbox.
Mm-hmm.
So what advice would you offer to other current or aspiring founders that might be in the audience today?
Absolutely. Look, you have to take the opportunity when you get it, right? So as a student, this is amazing. The Sandbox program is amazing because it allows current students at MIT to explore and try to be innovative, try to be an entrepreneur, which wasn't really available back, when I was there. And one of the things that was missing in our toolbox, if you will, for students. And so when this program was created, I was very excited to join it, to help in any way I could, and really provide a platform for our students to be able to start new things. But as a founder, I think the key thing is you have to be take the opportunity when you get it, because you're not going to get it that often. So if you get something interesting, you should think about it very hard. But you got to take smart risks, right? Something that you're very good at. Yeah, you don't want to deviate from your core strength. So if you are great at you understand some product and you have an idea, you have a vision, then by all means do it, but don't just copy somebody else's idea because they were successful in doing it. Because at the end of the day, you have to be an expert at that particular thing, whatever that is that you're doing. And once you have this opportunity and decide to move forward, you got to go all in. You cannot be half-hearted, because there is going to be volatility. There's going to be, periods, over a multi-year, multi-cycle on a basis. You will come across these challenges. And so you have to have that longer term vision to be able to withstand those things. The other thing that I would suggest is, surround yourselves with, people that are smarter than you, that are trusted advisors that will be, that are kind of vested in your interest and your success and or aligned with you. And I think that is something that, especially younger folks don't kind of appreciate. I mean, of course, we all believe in ourselves, but you need a team to surround you with who can be helpful to you. So I would do it that way. I wouldn't be short-sighted. Again, think more longer term. If you are looking to raise capital, you have to do it in a smart way, so that you continue to have the right amount of control over the opportunity, over your business, and you have investors who will support your growth, again, through ups and downs. And so you have to do it the right way. And then again, the Sandbox program is perfect for that, because there are a lot of advisors, internal and external alumni, who can provide you with guidance. And there's a group that help you with documentation and sort of some of the legal aspects if you're looking to take investor capital as well. So the Sandbox program provides all that, but it really comes down to very basic things. Is just you gotta believe in the product, you gotta invest in it fully, and go all in order to be successful. I think one thing I also, as a founder, you have to be cognizant of is that you're not just you know an investor in the business. You are also responsible for all the employees that you have. You're responsible for all your counterparties, whatever business you're in. If in the finance business, you're working with trading counterparties and banks who provided financing to you. If you're in other businesses, you have suppliers and you have all sorts of counterparties. You're responsible towards them as well. And so you have to balance everyone's interests too. And again, it's not just about making money. You have to build. You're trying to build something that you can be proud of eventually, and it will be part of your legacy going forward. So you have to do it. You have to think about it that way. You have much more responsibility on your shoulders as a founder than just an employee would have, or an investor. And so that's something that, again, I learned a lot through my experience, which I just mentioned, at my own firm, going through the financial crisis and having to deal with all those ups and downs. And at the end of the day, I was not, when I look back at my experience, I can feel proud that everyone involved with my business venture, did well through by working with me. So you can look back and feel good about, okay, you didn't cause any harm to anybody else. All the employees, all the counterparties generally did well working with my business, and that really is something that you can feel good about going forward.
Absolutely. Absolutely. That's wonderful advice. Thank you. So in 2024, your current employer, Soundpoint Capital, closed an IPO for its first ever registered investment company, of which you are the CEO. So could you talk a little bit more about what you learned from the IPO process and what advice you would offer to those joining us today who are seeking an IPO?
Absolutely. And that was another interesting kind of chapter in my career. Everything I'd done until last year was on the institutional side. So typically fund managers raise money from institutional investors, and then they deploy it in different products. What we did was, by taking our company or our fund public through the IPO, we were able to attract retail investors to our product, and expand our footprint. And that really was the main goal of doing the IPO, to have more long-term capital and have access to different investors. But I think anybody thinking about it should be prepared that that the IPO process can be a very arduous process. It's long, it's difficult. There are a lot more regulations. There are a lot of reporting disclosure requirements. And I think one thing that is important to note is that when you go public, you are now taking money from investors, retail investors and others all over the world. And so you have to be able to, in order to succeed in doing well, you have to be able to explain your product to those investors. And that was a big sort of learning experience for me, because in the past, I was used to talking to sophisticated counterparties who understood what I was doing. But then kind of during the IPO process, you have to explain your complex product to retail investors, and they don't speak the same language. So it's really being able to drive the details, or reduce the details into things that they would understand, was quite interesting and important for me as a great learning experience. And again, in whatever field you're in, you have to be able to do that. Your product, sometimes it's easier if you're building, a phone, or a computer, then, or a car, then yes, people will see it, they will buy, your investors will buy the product and become a consumer. So it's a little bit easier, they can see the product. But if you are doing something that is a little bit more like a financial product, or something that they can't touch or feel, then it becomes it's difficult to be able to cross that sort of bridge and be able to explain to them. So that was a great thing for me to be able to learn that and do that. The other thing is important to note in this space is that you have individuals who are putting their own life savings now in your product, in your hands, and it's very different from institutional investors, where they have, it doesn't matter if you mess up, you're part of, hundreds of different investments they have, and they will move on from there. Individual investors are putting their faith and trust in you, and it's a very humbling experience. But also, it gives you one more reason to deliver for them, because you have actual individuals who are impacted by your decisions. And so that really rejuvenated my desire to continue to be in this space and really do the best I could. And so I think that was a nice little kind of jolt needed, I guess, to so that I could continue doing this for a long period of time. So my advice, just to summarize, is you got to be prepared for the long journey of the IPO process itself. You got to be ready to deal with the volatility. IPO once you've gone public, you're out there. You can't hide. You're exposed to the whims of the market and whatever is going on in the space, and so you got to be able to deal with that. So you got to be prepared. You got to be medium term to long term focused. But I think it's a great sort of next step or final step for a lot of founders, and I would certainly recommend it as an avenue for growth for everyone that wants to undertake it. But just again, it's not straightforward or easy for anybody, but it's definitely very rewarding.
Absolutely. Certainly, it's an incredible experience and really interesting, kind of complement to everything else that you've done. So building upon that a little bit, you are one of the most active participants in the CLO market. Could you talk a little bit about what guides your decision making here, but then also how that translates to other industries?
Sure, absolutely. I think I mean, I won't go into the details of kind of what what we do and how it works. It's quite nuanced, but big picture, what we distinguish ourselves on is the fact that we are very data driven, and very facts based, and that is fairly unique in our industry. And again, it comes down to the background I have to be able to use a lot of data that's available, build financial models, and you use that to guide your decision making, and that's kind of what we've been able to do. And I think that differentiation allows us to generate alpha for our investors. So we, again, the goal is to be able to outperform our peers, outperform other asset classes that investors can access. But the fact that there is a lot of information available, and using that data and information, you're able to make better informed decisions. I think you can outperform your peers in doing that, which is what kind of which is exactly how we work. And again, this translates to other industries, other fields as well, within finance and outside of it. It's not just about, you have to have a gut feel for what you're doing. You have to, really take a view on where things are going to go. But you can never underestimate the actual facts and data that's available. And so, but you can combine those two things, right? The real objective analysis, along with sort of subjective view and your experience over the years in whatever field you are in. I think that is how I think one can be successful. And again, as MIT alumni, we have that unique edge because we have gone through, that sort of training, which I think you can use to your advantage, because, your peers may not be able to look at it the same way. So I think that's really the value created there, and I think it can be used in all other industries, not just in finance.
Absolutely, I completely agree. So we have one more prepared question before we move into audience submitted questions. So certainly encourage everyone to enter your questions into the chat, and we will field those as well. Ujjaval, as we previously discussed, you are Sandbox board member, but you're also a member of the development committee, which is a division of MIT Corporation. So could you talk a little bit about how you became involved with MIT and what advice you would offer to those joining us today who would like to do so in a similar fashion?
Perfect. That's my favorite question. Maybe I'll just talk about sort of my background before I got to MIT. I mean, I come from a very kind of average, a family with average means, and so when I got to MIT, we couldn't afford the high cost of admission, the high cost of tuition at MIT. But the school provided amazing financial resources to me, and made that journey possible. It would absolutely not have been possible without the help I got. And it's really, after years of kind of working and not being involved at MIT, about 10 years ago, I got back in touch, and I really look back on that journey and realize that all the doors that MIT opened for me, and the help I got to be able to do that journey, and that really inspired me to go back and help in any way I could. So that's why I joined the CDC, and also the Sandbox program, and I've been involved in the institution. Not as much as I would like to, because I'm still busy with my current role here, but in anything I can do to kind of provide guidance, provide advice, but also financially support the institution. And I would encourage every single alumni on the call today or listening in to do that, because what MIT stands for, their mission to build a better world is very unique. No other institution is able to do that. MIT is very pure in that every student getting into MIT deserves to be there and is there on their own merit. And the research that's going on is incredible, but most students cannot support and pay for the education, and so you gotta be able to have alumni supporting the institution in any capacity they can. So no matter how small your commitment to the school is, it is very, very, very valuable. And again, being a financial investor, you could look at sort of that investment you're making and what return you're going to get on it. I think it's the best investment you can make in bar none, because your money is going to be used to create some amazing technology or some breakthrough that could really help a lot of people and take us to the next level as human beings. And I think that's really what MIT stands for. So I'm thrilled and honored to be part of that community, and I think everyone should be doing what they can in whatever way, whether that's getting the word out like you're doing, Jackie, with these series, and getting people closer back to MIT, or any other capacity, volunteering, financial support, whatever you can do. I would encourage people to do that. And MIT in the past hadn't done a great job of connecting with alumni. They're doing a fantastic job now, but I'm sure there are a lot of alumni out there who can do a lot more, whether that's providing advice, whether that's, again, financial help, or supporting students in any way you can. I think there's a lot that one can do, and the size of commitment doesn't matter. It's really just your intention, and I would encourage everyone to get involved.
Thank you. Very well said, Ujjaval, and certainly incredibly important. So now we'll move to our audience submitted questions. We did receive a few in advance, so we'll start there, but please enter yours into the chat and we'll get to as many as we can in the time we have remaining. So the first question is, What is your take on the role of structured products before, during, and after the financial crisis?
Yeah. Great question. I think this is one of the questions that is kind of often misunderstood. There's a lot of misconceptions around this asset class. Structured products as a whole, it's a catch-all phrase. It includes lots of different things in it. It includes, mortgage products, asset-backed products. It includes, some of the things that actually did cause the financial crisis, which was driven by kind of, certain sectors of mortgages that weren't structured correctly. There were misalignment of interest, which created some of the stress in the market. And fortunately, after the financial crisis, there's been a lot of regulation to kind of control the systemic risks from this particular asset class. And so I feel right now the asset class as a whole is in much better place. It is regulated correctly. It is structured correctly. The participants are in it for the right reasons, and it's truly a product that is helping consumers and and companies and helping the financial markets grow. So I feel very comfortable with where the market is today. One of the things, as I said earlier, was that the product I focus on, CLOs, is just a subset of it, but it's one of those subsets that actually was unimpacted by the financial crisis because the underlying investments in it were very sound, and the structure itself was very well tested. So you can take technology and financial technology and use it for wrong reasons, but I think generally speaking, CLOs and other structured products had been a force of good in the market, but certain sectors did create issues during the financial crisis. But I think now the product is definitely on a very strong footing, but still there are some misconceptions in the market. So part of what we do as an industry is try to educate everyone better. The product is so powerful that it can be used for any other field, right? So now that technology has been used for and is being used for other areas, whether you have any form of receivable, whether that's royalties or receivables or anything else, you can securitize that as well. And it touches every single industry, and it touches consumers, it touches companies, and it's really the purpose of this particular asset class is to really make the entire process of investing and capital deployment efficient, so that capital can get to the places where it's needed. And so I think the role for structured products is stronger than it's ever been, and the product itself has been now. I think that some of the issues have been fixed, so I feel very strong, good about the future of the product.
Thank you. So the next question is actually a two-part question. So how do you apply an engineer's mindset to identifying and investing in emerging asset classes? And then could you share a specific framework or mental model that you developed at MIT that still guides how you structure deals and manage risk today?
Yeah, so I think, as I was saying, the engineer's mindset is to be able to understand. So what I learned as an engineer was, and what I still remember, I have forgotten most of it, but what I still remember is how to solve problems. That's what engineering teaches you. You can take a problem, you can understand it better than most people can. You can break it into different components, and then you can solve it using data and technology. And so that's really what an engineer learns in their career, in their school. And you can apply that to finance. You can exactly what I was able to do in my field, but you can do that for any asset class in the field of finance, whether that is, as I said, consumer assets, commercial assets, or any particular industry. What we're trying to do is, you are effectively creating these products to be able to allow capital to flow efficiently to different areas. And so you can think of it as an engineering problem, and that's really what allows engineers to be successful in this space is because all of these problems can be modeled, and that mindset is absolutely critical to be able to do that. Now, that mindset alone is not enough. You have to be able to, you have to be able to understand, economics. You have to understand how investors behave, and you have to be able to, explain and commercialize the product as well. So there's a lot of other skills needed, marketing and others as well. But at the core of it is really that data-driven approach, which I think is absolutely critical. I think the second question in terms of sort of what framework or models, there's nothing specific. It's really just, you got to be an expert, and you got to know your product better than everyone else around you. And if you do, you will make less mistakes, and you will be able to, do better than your peers. And that's really kind of the model, the guidance I have. One other thing I tend to do is, yes, the models can be very complex. You have to be able to use to kind of step away from the models and be able to understand the data yourselves, and you be able to use your brain to be able to say, okay, the model says one thing, but can I explain that? Can I, can I explain the results that a model is giving you? Because, as you grow these complex models and apply to different fields, you can sometimes get lost in those and in the details, and the models can lead you to the wrong place. And so every time I, come up with something new, I try to be able to rationalize the answer and come up with the answer before before the model does, and see if I can correct it and corroborate the answer. And that's kind of what I tell the interns and new kind of employees that I come across is that, and that is what an engineer can do, is be able to mentally model these things, and boil down the complex parts so that you have an input and you have an output, and you got to be able to understand the connection between the two, and the model gets you to the final number very precisely, but you got to be able to get the ballpark right by just being able to think through it using your experience. And that, I think, is the one of the things I learned, and one of the things that have helped me grow in my career, is to be able to not just rely on the models, of course build the models, but be able to do it yourself as well. And I think that's very important, because that is the only way you can apply the models correctly, improve the models, and avoid mistakes.
Mm. Very good advice, no matter what industry you're in. So, Ush, could you also talk a little bit about who inspires you in this field, or who you might consider a mentor, and why?
That's a tough question. There's no one particular person. I think it's really I like people who like taking risks, who take smart risks, and who put the effort in to succeed. So a lot of people have been doing different parts of finance for 30, 40, 50 years, and they're still kind of looking at every facet of risk, and they're involved day to day in managing money, and that really excites me. Is that attention to detail is absolutely critical, and that's part of what I'm trying to bring to my current role, is to be able to do that, because I think that that is that shows your commitment, that shows your dedication. You're not in it just force that short-term gain, but you really understand the product and you're willing to put the effort in. So those are some of the um, traits, characters that are important to me. Nothing specific to what I do, but in general, and that, again, not just my field, but any field. People who are able to, who are visionaries, but also are hard workers, who can change the outcome, because just having a vision is not important. You have not enough. You have to be able to execute on that plan as well. So those are the people that I really admire.
Mm. No, thank you. So AI is certainly a hot topic and something that everyone is discussing. Could you share your perspective and point of view on how AI may impact your work?
Absolutely. I mean, that's something that we think about all the time. I think um, uh, the specific field we are in, securitization technology, there's a lot of, as I mentioned earlier, there's a lot of data that's available. And so I think the AI technology is now beginning to be used for using that data, processing the data, coming up with the right sort of signals, and using that to really make investment decisions more efficiently, more effectively. And that is really something that AI can help us a lot. So we're looking forward to be able to use these new tools. Obviously, there are challenges and there are risks involved, but I'm a firm believer that in a few years' time we will have much better decision-making capabilities in the field of finance using AI, and so we're obviously going to embrace that as much as we can. And it's beginning to be used now, but there's a lot more work that needs to be done in that space. But I'm looking forward to being able to combine AI with our experience and make better investment decisions going forward.
Okay. Well, thank you. And I think we have time for one, maybe two more questions. But the next one is, can you share a bit more about how you balance your day-to-day? So how do you allocate your time by still, having ambitious eye towards the future and goals, while at the same time being sufficiently rooted in the details of the day-to-day? Certainly delegation is probably a part of this, but is there anything specific that you could talk about, making trade-offs and kind of balancing and juggling the
Yeah,
competing priorities?
sure, of course. I think obviously there are a lot of different facets to your role. For me, I absolutely enjoy the actual decision making and investing part of things. So that's certainly a big part of what I do. But I do spend a lot of time, talking to investors, talking to current and prospective investors, trying to explain my product, trying to, convince them to provide us the capital, so we could, work on their behalf. And that's a challenge to be able to explain. And that's something, again, as an engineer, you sometimes hesitate and you let a non-engineer, somebody who is good at talking to people or a marketer to do that. I like to do that myself, obviously with help from other folks, but I like to, because that not only provides insight to the investors. I think that's more convincing to them, so they can see exactly how decisions are made, but also makes me better at my decision making, because I'm constantly in touch with investors and trying to present and explain why we are better than our peers. And you are constantly tested in your thesis are tested, your processes, and so it really keeps you honest, and it allows you to grow. So I feel it's a two-way street when it comes to marketing, and I grow a lot from talking to our investors on a regular basis. So a big chunk of my time goes in that as well. And then just again, yes, delegating is important, so you have to surround yourselves with the right people. I have a great team here who understand the product well, but also bring interesting perspectives to me, and so we're kind of always working as a team. But those are two areas that I really enjoy: investing and also marketing. Again, in whatever field you're in, you got to be able to do both. You got to be able to, do what you're doing well, but also be able to communicate your ideas to others so that you can grow. And that really is I think that you got to balance the two things out.
Mhm. Absolutely. Well, I think that's a wonderful way to end, and we only have a couple minutes left. So thank you very much, Ujjaval, for sharing your insights and expertise with us today. We greatly appreciate it. And thank you all for joining us. Greg, I will turn it over to you for some final remarks.
Great. Thank you so much, Jackie and Ujjaval. Thank you for sharing your insights with us today. And I think, of course, good reminders for all of us to continue learning, to take smart risks, and of course, recommit to making a positive impact in the world. So thank you again. And thank you to our viewers for joining us. When you close out of the event, you will see a survey on your screen. So please fill that out and let us know your feedback on today's event, as well as on our ongoing lineup of events. You can join us next on April 29th to hear Hiram Samel, who is the senior lecturer at MIT Sloan. He is an expert on corporate insight, strategy, and scenario planning with imagined futures. So thank you again, everyone, for joining us today. We will see you next time.
Thank
Take
you.
care.
Thank you.
Bye-bye.